Hello everyone, welcome to EduTap and welcome to today's Finance 360-degree session. So in today's session, we are going to discuss the Financial Inclusion Index, which is a very important index for any regulatory body examination that you are preparing. So in the NABARD Grade A examination, from the Financial Inclusion Index, there was a descriptive question that has been asked in the previous year. For the SEBI also, as well as for the RBI also, the Financial Inclusion Index is very important. Okay, if you are preparing for the RBI Grade A now, for the RBI Grade A examination also, the Financial Inclusion Index will be important in the current affairs. Okay, in the RBI Grade B, again and again in previous years, we have seen the questions from the Financial Inclusion Index. So this Financial Inclusion Index, it is very important for your regulatory body examination. And today we will discuss the updated data that has been released for the Financial Inclusion Index, as well as we will discuss the background. Okay. So first of all, give me a thumbs up if I'm clearly audible and the screen is visible. I hope everything is fine. Okay. So let's start with the discussion. We will discuss the facts that are very important from the Financial Inclusion Index. Remember that in NABARD, a descriptive question has been asked from the Financial Inclusion Index. So such a descriptive question can come in the RBI Grade A examination or in the SEBI examination also. From the objective point of view, this is important. For the other examination, from the descriptive point of view, this is important. Okay, chalo, let's get started. But before that, do subscribe to the YouTube channel of EduTap and do join our Telegram channel where you will get the PDF of the session. So the PDF of the session you will get in the Telegram channel of EduTap, for which the link is provided in the description box below. Okay, so the PDF you will get in the Telegram channel, and for that the link is provided in the description box below. Chalo, so let's start with the today's topic. Financial Inclusion Index rises. So first of all, Reserve Bank's Financial Inclusion Index, it captures the extent of financial inclusion in the country. What is the extent of financial inclusion in the country? How much financial inclusion is happening in the country? It has improved or not? So Reserve Bank's Financial Inclusion Index, it captures the extent of financial inclusion in the country. It rose by 4.48% during the year ending March 2026. So the year ending March 2026, for that the financial inclusion improved or increased by 4.48%. What is the financial inclusion first of all? See, the financial inclusion basically means involving the individuals, involving the businesses in the financial system of the country. So financial inclusion means that the individuals and the businesses, they should have the access to and use affordable financial products and services. Now, in the financial products, usually we are talking about the banking products and services. There are also the investment under the SEBI, under the Securities and Exchange Board of India. There is the capital market. So we also invest in the bonds. We also invest in the equity or the shares and such. So the investment products and services should also be provided to the individuals and businesses. The pension products and services, the insurance products and services and such. So basically financial inclusion means that involving the people, including the people, the individuals and the businesses, they should have access to and they should be able to use the affordable financial products and services that meet their needs, such as the insurance needs, pension needs, banking needs, investment needs, which are delivered in a responsible and sustainable way. So this is the financial inclusion. So financial inclusion means that the individuals and the businesses, they should have access to and they should be able to use the affordable financial products and services that meet their needs, which are delivered. Now these financial products and services should be delivered in a responsible and sustainable way. So this is the financial inclusion, involving the individuals, involving the businesses in the financial system of our country. I hope the definition is first of all clear, and this is the definition you can use in your descriptive answer. Any question is coming regarding the financial inclusion, that how the government or what are the steps taken by the RBI or what are the steps taken by the different regulators for improving the financial inclusion in the country. So this is the definition that you can use first of all. Okay. Now, so RBI had constructed a composite financial inclusion index. Composite financial inclusion index means that this financial inclusion index, it not only looks after the banking products and services, but it also looks at the investment products and services, the postal, the insurance, the pension products and services, the people, the individuals and businesses, are they getting access to these different products and services? So RBI had constructed a composite financial inclusion index. So the financial inclusion index is a comprehensive index incorporating the details of banking, investment, insurance, postal, pension sector in consultation with government and the respective sectoral regulators. Now I hope you know that RBI is the monetary authority. It is the monetary authority that is regulating the banks, NBFCs, the credit information companies, as well as the all India financial institutions and such. But the like RBI is also regulating the money market, that is the short-term market for investment. Okay, the SEBI is regulating the capital market, that is basically the long-term market for investment. The IRDI, Insurance Regulatory and Development Authority of India, it is regulating the insurance sector. PFRDA, that is Pension Fund Regulatory Development Authority, it is regulating the pension sector. The postal comes under the government. So when the financial inclusion index is prepared, the consultation is done with government, the consultation is done with the respective sectoral regulators to get the data, to get the feedback, to get the information about these different areas. Okay, so PFRDA for pension, IRDI for insurance, SEBI for investment purposes, and government for the postal. So that's why RBI has, this is a composite financial inclusion index that is prepared in consultation with the concerned stakeholders, including the government. Now, why this financial inclusion index is prepared? To capture the extent of financial inclusion across the country, which was first published. So financial inclusion index, it was first published in August 2021 for the financial year ending March 2021. Remember that the financial inclusion index was first published in August 2021 for the financial year ending March 2021. Okay, this is the idea. Any confusion, anyone? Now, what has happened? What is the current data? So this is the background that we have understood. The current data is that the financial inclusion index has improved from March 2025 to March 2026, from 67.0 to 70.0. Now what does the 70 means? 70 means that, okay, the improvement from 67 to 70 means what? So this we are going to understand that what does this 70 value signifies, or what does the index value signifies. Okay, but remember that the financial inclusion index has improved from March 2025 to March 2026, from 67 to 70, and the data for the financial inclusion index is released on the annual basis, and the data is usually released in the July month. So in July 2026, the data for March 2026, this was released, that the financial inclusion index has improved from 67 to 70. So index for the year ending March 2026, that the value was released in July 2026. This has since been compiled, and the value of financial inclusion index for March 2026 stands at 70 against the 67 in March 2025. So what does this value signify? See, the index captured. Now, the financial inclusion index is an index that does not have any base year. Base year is the year against which we compare the coming years. So let's say for the digital payment index, 2018 is the base year. That has the value 100. So if in 2025 the value is 565, so that means the digital payments have penetrated, their extent have increased, because we can compare the current value with the base year value. Okay, so digital payment index that sees the, or that shows the penetration and the deepening of digital payments, it has a base year. But the financial inclusion index, it does not have the base year. So the financial inclusion index, it does not have a base year. So how can we compare, or how can we see that, okay, the 70 value is good or not? So the index captures the information on various aspects of financial inclusion in a single value, that is 70 that we saw, ranging between 0 and 100. So if the value is 0 or near 0, it represents, if the value is 0, that represents complete financial exclusion. The people, the individuals, the businesses, they are not getting included in the financial system of our country. If the value is near 0 also, that means there is financial exclusion that is happening. Okay? But if the value is near 100, first of all, if the value is 100, that indicates full financial inclusion. All the individuals, all the businesses have been included in the financial system of the country. But if the value, let's say the value is 70, that is nearer to 0 or 100. So 70 is nearer to 100. That means we are moving towards full financial inclusion. We are moving towards greater financial inclusion. The value has improved from 67 to 70. That means we have reached nearer to 100. That shows that we are going towards the financial inclusion. We are moving towards the better financial inclusion. Okay. Now, the financial inclusion index, it comprises of three broad parameters. Okay. So the financial inclusion index has three broad parameters. The access. Do you have access to the financial services, the products? Do you have access to the banking services? In your nearby area, do you have the bank? Do you have access to the insurance products and services? Do you, like in the online method or in the offline method, the insurance agents or the insurance like online, do you have the access? Like, do you have the access to pension products and services in the digital manner or in the offline manner? So this is the meaning of access, that you have the access in digital or in the offline method, for the postal services also, for the investment also. Yes, through Zerodha, you can easily do the investment in the stock exchanges, in the stock market, in the stock market, in the stocks, in the different securities. You can easily do investment through Zerodha. There are so many of the insurance platforms. Okay, there is Bima Sugam that the IRDI is launching. Through the Bima Sugam, it will be a platform that will provide you the access to multiple different insurance products and services. So you can understand that access means that you have the access, do you have the way to get the products and services. Okay. Then usage. If you have the access, are you using the products and services? Do you have the health insurance? Do you have the motor insurance? Do you have the insurance that you require? Do you have the banking services or the bank account? Are you using the pension services and products? Are you using the postal services? So this is the usage, that even if just near to my house I have a bank, but if I'm not opening the bank account, is there any benefit of having the access if I'm not using it, if I'm not aware about using it? So then the benefit is not as much. Okay. So access means that do you have a way to reach, or do you have the way to get the financial products and services? The usage means if you have the reach of these financial products and services, are you using them? Do you have the awareness? Do you have the knowledge? Do you have the financial literacy to be able to use it? Has the government or has the different regulators spread the financial awareness for the people to be using these products and services? Then last is quality. Quality is a very unique, it is a very important feature in the financial inclusion index. And usually quality is something that is difficult to understand. A unique feature of the index is the quality parameter, which captures the quality aspect of the financial inclusion as reflected by financial literacy. Again, you will be able to use the products, you will be able to use the banking products, the insurance products, the insurance services, the pension products, pension services, only when the people have the financial literacy. There is the need for the consumer protection also, and inequalities and deficiencies in the services have to be reduced. Then only the people will have the quality financial inclusion. Okay. So this is the idea. So these are the three broad parameters. The highest weightage is given to usage, that is 45%, then access 35%, quality 20%. This is the idea. So these are the parameters that you have to remember from the examination perspective. So in the financial inclusion index that sees the extent of the financial inclusion, there are three parameters through which we can gauge the financial inclusion, that is access, usage and quality. Now, so the index has improved from 67 to 70 from March 2025 to March 2026. How this improvement has happened? So the improvement is because of growth that is witnessed across all sub-indices. That means there is growth in access, there is growth in usage, there is growth in quality also. But the improvement in financial inclusion index in March 2026 is mainly on account of the uptake in usage. That means the highest or the greatest improvement is in the usage category. thus reflecting the deepening of the financial inclusion. That means the awareness, the information, the knowledge is spreading, the financial literacy is also spreading. So this is the idea that the access, usage and quality, all of these parameters, all of these sub indices, they have improved, but the highest improvement due to which the financial inclusion index could improve from 67 to 70. So the highest improvement is in the usage category, okay. Chalo. So here you can see then that on August 17th 2021, the RBI informed that the RBI will be releasing the Financial Inclusion Index. So RBI has constructed this composite Financial Inclusion Index that the RBI will be releasing on the yearly or on the annually basis, and the Financial Inclusion Index will be published annually in July every year. And we have seen also that last year also it was released in July, this year also it is released in July. Now there are three broad parameters according to which the Financial Inclusion Index is prepared: access, usage and quality. And under these three broad parameters there are 97 indicators. There is no base year. The value is in between 0 and 100. 0 means complete financial exclusion, 100 means complete financial or full financial inclusion. This is it. This is what we have discussed. Now coming to the questions, remember that from the Financial Inclusion Index there can be a descriptive question that can be asked, or the objective questions can be asked. With reference to RBI's Financial Inclusion Index for the year ending March 2026, consider the following statements and which of the statements given above is or are correct, that you have to tell. So Financial Inclusion Index increased from 67 to 70. The improvement was mainly driven by an increase in the usage parameter. The Financial Inclusion Index for March 2026 indicates complete financial inclusion. The value of 70, does it indicate complete financial inclusion? So you have to tell that which of the statements above is or are correct. Now coming to the next question, which one of the following is not a feature of the Reserve Bank of India's Financial Inclusion Index? It incorporates information relating to banking, insurance, postal, investment and pension sectors. It is constructed without adopting any base year. It consists of three broad parameters and 97 indicators. It is published annually. It assigns equal weight to all the three broad parameters. So these are the homework questions that you have to answer in the comment section below. If you answer it correctly, I will reply that you have answered it correctly. Okay, so this is it for today. I hope you enjoyed the session, and thank you very much for joining the session. See you in the next session. Okay, and these will be the, now I will be bringing such kind of important topics on Tuesday and Thursday that will be important for your SEBI, NABARD, RBI or whichever examination that you are preparing for. Even in the banking exams, these topics will be important. Okay, so on Tuesday I will be bringing such generic topics. On Thursday we will be doing more specific topics that are related to the RBI Grade A examination. Okay, so this is the target. Your sessions, 2 sessions will be there on Tuesday, one on Tuesday and one on Thursday. This is it for today. Thank you everyone. Thank you for joining. And yes, Chetak, well done. You have given the right answers. Do write in the comment section below. Thank you everyone. Thank you for joining. See you in the next session now.